Welcome back. In today's video, we're going to be doing a crypto and stock update, the macro update, as we're exiting 2025 and entering 2026. This is one of my most requested videos, and this video was recorded just 24 hours, one day before it's being released here on YouTube. So it's a little bit different than what we're seeing with some of the other videos that are a little bit more delayed. But in today's video, we're going to be exploring, are we about to see a Santa rally? A lot of the bulls in the market, a lot of the YouTubers out here are calling for the start of a bull run, even though we've been in a bull run effectively for 2 years now. And we on this channel have been kind of analyzing since the middle of 2025 where the cycle actually is. Now, this video is not just going to be about Bitcoin, it's going to be about crypto in general, the Bitcoin mining stocks, AI, robotics, and really the macro market, which is what we talk about on the regular right here on the channel. And so sometimes we talk about the macro, the zoomed out picture of everything and how everything affects everything else. And sometimes we do deep dives into individual topics and cryptos and stocks. So make sure you guys are subscribed to this channel. We upload every single day to bring you the latest happening in the financial world. Also, do me a favor, give the video a free thumbs up. And you can also become a channel member by clicking the join button down below. But this is the long-awaited video. Are we entering a bull market, or are we entering the bear market? And are we going to have a Santa Claus rally as we exit out 2025? Let's get right into today's video. Now, as you guys know, right here on the screen is the Bitcoin price after the halvings, and we are right on target based on the previous cycles, based on the 550-day mark after the Bitcoin halving, which is about 18 months, which has historically been where the top of the market has never been hit afterwards until the next cycle. And we've been talking about this since the middle of the year, and we have been very accurate on this channel. And so, there's a lot of back and forth views around crypto with a lot of the influencers, a lot of the big accounts on whether we're in a bull market, whether we're in a bear market, whether we're about to see a relief rally. At the end of the day, Bitcoin, in my view, has not broken the 4-year cycle, which a lot of people are talking about, that the 4-year cycle's over, the 4-year cycle's dead, no more 4-year cycle. Bitcoin is, moving up because of the business cycle or this or that. Well, at the end of the day, we have to trade the market that we see in front of us, not the market that we want. And I know a lot of other YouTubers have been saying the same thing, but meanwhile, they're literally trading the market they want, not the market in front of us, talking about, oh, well, hopefully we get one more rally. That way I can exit my positions. And meanwhile, everybody else is thinking the same exact thing. And this, in my view, is the denial phase of the cycle. Euphoria was when all of these Bitcoin treasury companies popped up. Complacency was as we entered the all-time record highs in Bitcoin. Anxiety was basically when we started to see flash crashes and major drops down to $80,000 in Bitcoin. And now we've been hovering, right? But I want you guys to remember a few things. Number one, there's no more buyers really in the market, right? People are going to say, but Cryptoviser, Wall Street's buying. And it's like, yeah, but they're also selling. But Cryptoviser, MicroStrategy. And it's like, yeah, but MicroStrategy is literally begging, okay? Not like figuratively begging, like literally begging to not be removed from the MSCI index in January, which to me is kind of a lock. It's going to be removed. The fact that MicroStrategy and Michael Saylor are putting out all of these, letters to MSCI begging them, don't remove us. We are a really good company. We're doing all of this stuff. And meanwhile, they've done absolutely nothing to create cash flow for their business, like real cash flow, not selling stock on the open market. Why would a stock index subject everybody who follows that stock index or buys into that stock index to continued, constant, and non-ending, never-ending dilution of the stock? This is not real investing. And while Michael Saylor, MicroStrategy, 21, all these Bitcoin and Ethereum treasury companies could have created actual cash-flowing businesses this year with all the money that they've been raising, that's not what they've done. They're literally buying the top of the market. I mean, if you look at the last year, the Bitcoin treasury companies started really kind of popping up in the middle of the year. You could see this was when the top of the market was, and then they just kept buying and buying and buying and buying over $100,000. Now we're under $100,000. They're all underwater, and they have no cash flowing business. So what is going to happen in a bear market? And by the way, the market is going to test this. I keep saying this to my viewers. Until we hit the MicroStrategy buy price of $74,000, about $75,000 at this point, which you can see on the screen right here, this is their dollar cost average. We are going well below this because the market is going to test MicroStrategy. And by the way, it's not just testing MicroStrategy, it's testing the breadth and the confidence in the market, because all these bulls are like, oh yeah, MicroStrategy is totally fine. And it's like, okay, let's see what happens under $75,000. Now, we also have to keep in mind what the Federal Reserve is doing and what they've said. Nick, who's a Wall Street insider, said key takeaways from the Powell presser, the press conference from the Federal Reserve chairman in December, where they did their third rate cut in 2025. Now, I want to remind you, in September, the Federal Reserve lowered rates. Bitcoin wavered. October, they lowered rates. Bitcoin dropped. Now, December, they lowered rates. And what is going to occur? Well, I mean, based on the trend, which is sideways or down, we're probably going sideways or down. I mean, all the Bitcoin bulls and people who are one-sided in their thesis, they say, well, Cryptoviser, Jerome Powell is lowering rates. They're ending quantitative tightening. They're starting money printing. And it's like, no, they're not starting money printing. They're lowering rates. And lowering rates doesn't necessarily mean money printing. And it doesn't have anything to do with crypto. Right? Crypto has nothing to do with crypto. In fact, it's actually worse for crypto because all the stablecoin issuers that are making all this return in money, like literally right after the Federal Reserve press conference, Coinbase sent out an email that their interest rates for USDC interest is going down. So we went from 4.5% holding USDC last year to 3.5% holding USDC this year. And so these companies are going to be making less money as well. And then we had the forward-looking comments from Powell. So in the press conference, Powell more or less declared the recalibration phase complete and said they're now well-positioned to wait, meaning no more cuts or slowing down of cuts. He blamed the committee divide on the unusual tension in the dual mandate, right? Unemployment or employment, maximum employment, and also inflation, and validated both sides of the debate. Because we know that we've been seeing a lot of headlines on layoffs. Now, Jerome Powell said, well, we're not seeing a rise in unemployment. And a lot of the reason, in my view, that we're not seeing a rise in unemployment is because a lot of the layoffs either haven't taken place just yet, or there's like deferred compensation, like for instance, like a buyout package saying we're going to lay you off, but we're going to give you 3 or 4 months or 6 months of pay, and then you're out of the job. Meanwhile, they can't file for unemployment until that money stops. So this is all delayed. And remember, even the president of the United States says too late Powell, because Powell is going to be too late. He's saying, oh, we're not seeing really a lot of unemployment, even though we're seeing all these headlines of people getting unemployed. Well, that doesn't make sense, does it? Jerome Powell made a surprising direct case that job growth may be a negative due to measurement challenges, saying gradual cooling in the labor market has continued just a touch more gradually than anticipated, which reduces the level of concern around services inflation. Meaning, when people are getting laid off, we're not going to necessarily see inflation because people don't have the money to buy stuff, and so prices go down. And so this is the back and forth that we see. He said, even if rates are closer to neutral, rate hikes aren't anyone's base case. So we're not seeing any talk about raising rates, but we're also seeing talks about pausing rate cuts. And so that brings us to the macro environment and crypto, right? I mean, the trend is down. I haven't seen any evidence or data or analysis that has changed my viewpoint on this. Now, when we see these little pumps in the market, everybody's getting excited. When we see MicroStrategy pumping up a little bit, like here, right? It went down to, in the beginning of December, went down to 170 and then pumped back up to 197. And everybody's like, oh yeah, you see the bull market's starting, the bear market's over. I'm like, the bear market hasn't even started yet. I mean, we're rotating. The rotation phase into a bear market could take up to a year, maybe even longer. And the other thing is, we know, and all these bulls, they know that MicroStrategy is going to sell shares to buy more Bitcoin continually and endlessly. They have given no indication that they're going to pause or stop doing this. And so all these bulls that are like cheering this on when we go up to 197, are they like completely brain dead or not analyzing the market? I don't know, because when it goes up to 197, that makes me want to bet against MicroStrategy stock even further, because I know Michael Saylor's MicroStrategy, they're going to look at this market and say, well, the trend is down. They know that. That's why they're begging the MSCI not to remove them from the index. That's why they're raising cash for a dividend reserve to like ease the market concerns. But that doesn't remove the market concerns. It just eases the market concerns. In a bull market, nobody's concerned because the market keeps going up and they can keep raising money and keep selling shares in the open market. But we've been seeing a continual deceleration of that, even though they haven't decelerated their selling of shares and buying of Bitcoin. And so every time I see this happening where the price goes up a little bit and the bulls are like, you see, it's over. Oh my God, we're so bullish. And I'm like, he's selling. He's selling into this rally. Guaranteed. Next week, Michael Saylor, or I should say MicroStrategy, because Michael Saylor is not MicroStrategy. These are two separate things. But MicroStrategy is going to announce, no doubt in my mind, they're going to announce next week, oh, we bought more Bitcoin. We bought more Bitcoin. And you know how they bought that Bitcoin? Selling shares in the open market. So as we were rallying and all these bulls were getting all bullish and saying buy, 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 and you were buying it directly from MicroStrategy. That's why we see the dumps right after. These pump and dumps are not going to stop. And it's not going to stop, not because I don't think in the longer term MicroStrategy's thesis is going to play out. I've told my viewers over and over, like, I think there's going to be a time where it's going to be a buy time for this stock. But the real key signal, in my view, is all these other Bitcoin treasury companies that have not purchased any Bitcoin, period. They just bought over 100,000 and they're in massive losses and they don't know what to do. And MicroStrategy just keeps selling shares in the open market and buying, and the bulls just keep blindly buying it. Now, for the rest of the crypto market, I think that it's important to understand that everything is following Bitcoin, right? Ethereum, very little conviction and move to the upside. Meanwhile, we have Tom Lee, and this is the first real thesis that Tom Lee has laid out since the pandemic, since 2020, that I believe is wrong. And you can kind of hear it in this little clip here, where basically he says, like, buy into the super cycle. And he kind of is moving the goalposts, not saying the super cycle is here tomorrow. It's going to be in the future. So let's listen to what Tom Lee says. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. You can also become a channel member. We upload every single day. We've been 100% accurate this whole cycle on Bitcoin and on MicroStrategy. Some of the other plays we haven't been, but as I've explained, like, if you have 10 positions and 9 of those positions go to 0 and 1 position goes up 10x or 20x, you're still in the green. Everybody wants all 10 positions to go up. That's not how the markets work. That's not how trading, that's not how investing works. Sometimes it's one trade over the course of 10 years that wipes all of the losses that you had in 99 other trades. Let's listen to Tom Lee.
Not about what's happening today, it's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is, if you're discounting the future, Ethereum at 5,000 and Ethereum at 3,000, it's still got a $100,000 price in the future. Everybody wants.
Now I'm going to pause right there for a second. Now I agree with what Tom Lee is saying. If Ethereum gets the usage, the integrations, and all of that, and it does move to $100,000, which is a big question mark at this point. And the reason it's a big question mark is because, first of all these other altcoins are going to 0. I mean, effectively, they're going to 0. None of them have done anything revolutionary. None of them can really do anything better or more, or have gotten the interest from any major companies, right? Some Wall Street companies have created like strategic reserves for some of these cryptos, but for the most part, nobody's using them, right? And by the way, the banks, which are Wall Street and are big corporations, they're now creating their own blockchains. And this is the biggest risk here. Because if they can create a blockchain, their own blockchain that can do things fast, I mean, Ethereum is still talking about, well, if we do this, then we can lower the gas fees. And I'm like, you guys have been talking about gas fees for literally 10 years. And they haven't solved anything with the gas fees, with the transaction per second, with the transaction bandwidth, and all of these issues that these blockchains have, these legacy blockchains, they haven't solved any of it. Meanwhile, these bank blockchains, they just tell their engineers, hey, do this, do this, do this, get it out by, you guys got 3 months. And they get it done in 2 months. Meanwhile, Ethereum is still, well, if we talk about sharding for another 5 years, maybe we'll actually get full sharding on the blockchain. And it's like they've been talking about it literally for 5 years already, sharding, and they still don't have a full implementation of it. And these are just small examples. And so the banks, they're creating their own blockchains to do all these things. They're creating their own stable coins to do all these things. And it's to the point where even Cathie Wood has lowered her 2030 price target for Bitcoin by 30%, lowered it by 30% from 1 million to 700,000, because she said a lot of the market share is moving into stable coins because stable coins are doing what they thought Bitcoin was going to do. And therefore, also what they thought Ethereum was going to do. And so I do somewhat agree with what Tom Lee is saying. Like, if Ethereum does get to $100,000, it's not going to matter whether you buy it at 3,000 or 5,000, right? Because you're still going to have, hundreds of percent gains. But are we actually going to be able to get there? And what is the time frame to actually get there? Again, what we talk about on the previous cycles with Bitcoin is you can clearly see diminishing returns in the previous cycles. Most altcoins have not reached their all-time record highs as we move through cycles. Some of these cryptos haven't even reached their all-time highs from 2 cycles ago, let alone last cycle. And most of them haven't even reached their all-time high from last cycle, this cycle. And so all this talk about, well, Cryptoviser, last cycle, we should be at this point based on where we were in last cycle. And I'm like, yeah, but we're not in last cycle. We're in this cycle. And this cycle, the banks are taking over. The Wall Street's taken over. And a lot of influencers and a lot of Bitcoin OGs have warned about this for years. They said when Wall Street gets involved, that's effectively over for the super cycle in crypto. And I think we are there. Let's continue listening to Tom Lee.
Wants instant gratification. They want, of course, to hit the buy button and the next day they make money.
Of course, if not, it's a scam.
Yeah. and everyone thinks that over the next 5 years, they'll push the buy button 1,000 times and get 1,000 buy buttons right.
I wish I
Okay.
could do that.
You're better off investing.
Listen to this.
Yeah.
5%.
Yeah, most people can't day trade because there's too much emotion
I
involved.
can't at all.
Yeah. So if I had to say what are people getting around Ethereum, tokenization is this super cycle, this 5-10 year story, which means over the next 10 years from now, Ethereum is a completely different chain than it is today, monster sized. So today's price is discounting the next 10 years, right? Like imagine you're like looking with a telescope 10 years from now. So you're looking at something 1,000 miles away and you get there.
Yeah.
That's Ethereum's future. So the discount to the future is like, it's 1,000 miles away and you just took 5 steps.
Yeah.
It's still in the future. So Ethereum's price is not about what's happening today. It's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is if you're discounting the future, Ethereum at 5,000 and Ethereum 3,000, it's still got a $100,000 price in the future. And that difference in the price today is just a small variation in the discount rate.
And so you can clearly see that Tom Lee has changed his tone a little bit on what the super cycle is, right? He's made some pretty extraordinary predictions for the end of 2025, and we're at the end of 2025, and none of those have come true or even close to that. And by the way, this is a macro situation going on, right? Because if we zoom out and look at the rest of the market, let's look at the Bitcoin mining companies that pivoted to AI, like Iron. Iron is the largest, right, by market cap from Bitcoin mining to AI. They have a lot of contracts. But again, this is a buy the rumor, sell the news event. The rumor was in the middle of the year when they were pivoting to AI. And we went up from $5 all the way up to $70. And then we had announcement after announcement after announcement of we're making an agreement with Google. We're making an agreement with FluidStack, with Microsoft, and they're going to be using our equipment and our infrastructure for their AI projects, which is good and is great. But at the end of the day, that was the news. Buy the rumor, sell the news. What's next, right? The market's always forward-looking. And so once you actually meet that news, people start to sell and take profits. And then as the macro environment, everything that's going on in crypto, in AI bubble conversations, Bitcoin bubble conversations, start to wind down, you start to see this trend down, lower lows and lower highs. And you can see that right here very clearly, that we are basically trending to the downside. But the people who bought up here, people who bought, and they want to make those 10x returns or 15 or 20x returns, they think that it's not over. But just because they think that doesn't mean that it's not. And I'm not saying not over forever, but I'm just saying not over for this cycle, right? And the cycle, again, if you look at the Bitcoin halving chart, we are right on target with Bitcoin. And in the macro cycle, when we understand what's going on with the Federal Reserve, when we understand what's going on with the midterm elections coming up, the Democrats, they don't like crypto. And they have been pushing the whole narrative of, the Trump family's making a lot of money on crypto and pushing crypto. So this whole idea that crypto is going to do well next year, I don't see it. I don't see it. And this whole idea that the market structure bill is going to pass, everyone keeps saying, oh, it's going to pass next month. It's like they've literally been saying that for 2 or 3 years now, that the market structure bill and the crypto bill and Bitcoin buying bill is going to pass. And none of that has actually come to fruition, not even close. And so from a macro environment, people say, well, Cryptoviser, are you bullish or bearish? Well, it depends what we're talking about and what time frame we're talking about and stuff like that. I mean, generally speaking, I believe the market's going down. That doesn't necessarily mean I'm bearish on the market. It just means that I believe the market is due for a correction. And this sideways trading after a significant upward move is usually not an indicator of, oh, we're bottoming out. It's usually an indicator of there's no more strength in the market. Because if we were able to go up by, over 10x over the last 6 months, if the market was still bullish on this, we would continue to go higher, and we haven't. We have slowed down. And once that slowdown occurs, that's when the market starts to shift. And these shifts occur based on a lot of different factors. But when we're thinking about the 4-year cycle, it's right on cue, right on target. Bitfarms, same kind of conversation, right? A lot of anticipation for a lot of things happening with Bitfarms, but a lot of really what Bitfarms has been talking about with re-domiciling in the United States, getting included in US stock indices, this is all mid-2026, if not further down the road. And their CEO, Ben, has clearly stated this. But the bulls who did not sell any of their coins at the top, or even where we are today, I mean, if you bought in the middle of the year at 60, 70 cents, when we called the double bottom on this channel, and we were 100% accurate, 100% accurate, I mean, on that call, and we're still significantly above where we were. I mean, more than 400% to the upside from that low of 60 cents. I mean, this is still not a bad time to take profit. Do I think that Bitfarms am I bearish on Bitfarms? No. But do I think that Bitfarms can continue to decline based on the macro environment? Of course. And the answer is yes. So can MicroStrategy. So can Bitmine Immersion Technologies. So can Nakamoto. But this is a great opportunity in my view, because if we know it's going lower, we can shore up liquidity, shore up dollars to buy back in. And by the way, those bulls that are saying, but Cryptoviser, you're gonna miss out. You're gonna miss out. Same thing they said for Internet Computer Protocol after I posted a video that I was selling, and then all of a sudden, magically, the price went up 300% right after I posted that video. And people were saying, Cryptoviser, you're gonna have to buy back at higher prices, and probably wanted me to come back on YouTube and say, guys, we gotta buy back in. That was a pump and dump. It was fake and manipulation. And by the way, Wall Street is not investing in any coins that have clear and easy manipulation, like what we saw with Internet Computer. How it was being manipulated to the upside, I don't know. Maybe it was traders, maybe it was developers, maybe it was bulls in the market. I don't know, but there was clear manipulation on that coin, right? And so the idea here is the trend is lower. If you're bullish, there's never a bad time to buy. Whether we're at this price, whether we're 10% higher, 100% higher, 500% higher, it doesn't matter. If you're bullish and you think that the price is going to continue to go up, there's never a bad time to buy. So selling shouldn't be an issue. Taking profits out of the market shouldn't be an issue. And by the way, don't let anybody ever tell you taking profits out of the market ever is a bad idea. If you're in profit and you want to take it and move on, right, to the next trade. And so, yeah, ICP did a full round trip. And again, Wall Street is not interested in these thinly traded cryptos that can be easily manipulated, as we saw in November with the manipulation of that coin. And by the way, many of these coins can do the same thing with the manipulatability of the coin due to thin trading, thin float, and not a lot of interest, because really the interest is in Bitcoin and Ethereum, and that is waning out, right? I mean, it's very clear. But again, we want to shore up liquidity. That way we can buy in. Do I think that Kindly or Nakamoto is a buy? Not just yet, but it's going lower. 100%. As Bitcoin goes lower, this will go lower as well. And if we go down to 10 cents, 5 cents, 4 cents, 3 cents, and a lot of people are like, no, there's no way that's going to happen. Well, we'll see about that. That is a great opportunity to get into the market and buy. So it's not about bull market or bear market. It's about where the trend is going, right? Because I'm bullish on Bitcoin in the longer term. But in the next 1 year or so, no, I think that it's going to go down. That doesn't mean I'm bearish on the crypto and the technology and the future. It just means I'm bearish on the price movements, because that's what the market is telling us. And then we also have to keep in mind what is going on with AI. And by the way, I thought that the circular financing, where OpenAI was funding NVIDIA and NVIDIA was funding Microsoft, and Microsoft was funding another company, and the other company was funding back to OpenAI, the circular financing, I thought this was the top, and it wasn't. You know what's the top now? This user from StarCloud, CEO, he said, we just trained our first large language model in space using NVIDIA's H100 in StarCloud 1. We're the first to run a version of Google's Gemini in space. This is a significant step on the road to moving almost all compute to space, to stop draining the energy resources of Earth and start utilizing near limitless energy of our sun. So we went from building data centers, right, with Iron and Cipher Mining and Bit Farms and all these different companies, to we're going to forget about the land-based AI data centers, and we're going to start creating data centers in outer space. They're literally, clearly shooting for the moon, like quite literally, pun intended, shooting for the moon here. But this is years away, right? Granted, they may have some testing going on, but to really scale this up and build out the infrastructure to actually do this, it's going to take years, in my view and analysis. Maybe I'll be wrong on this, but it all comes back to like what you really think is possible. I mean, obviously anything is possible, but from a market standpoint, everything is starting to turn the downside. And for Congress, for the government to come in and start printing massive amounts of money in spending bills and things like that, there needs to be pain in the markets. There needs to be pain in the economy. And we're in the first stages of that, right? People are getting laid off. AI is replacing jobs. Jobs are not being refilled and stuff like that. And so all these people who are now out of jobs, they're still getting paid, many of them, right? Because they have severance packages and things like that. But once that dries up, if we weren't in a recession already, we are going to be in a recession. And so that is going to be the point where we actually start to see money printing. I think this is going to happen at the beginning of 2026. We're going to have a new Federal Reserve chairman by the middle of 2026. And then potentially we can start turning the market around. But we also need more pain in crypto specifically. But when we look at NVIDIA, when we look at Palantir, this podcast, Risk Reversal Media, said Palantir is the dumbest effing stock in the entire market. Let's listen in. We're going to play this at 1.25 speed or 1.5 speed. And by the way, don't forget to give this video a free thumbs up. Let's listen in.
This is the dumbest fucking stock in the entire market. That would be Palantir, right? And when you look at this volatility, and you've made this point on many occasions, I mean, that move off of the highs, you first had a gap lower after earnings. Earnings were great. There was nothing wrong with the earnings, right? When people kind of peeled the layer back of the onion, maybe it wasn't as great. I mean, think about their business. Half of it is AI related on their AI platform. The other half, it just looks like an enterprise software company with a big consulting group, right? So you saw a 35% sell-off or so. And you know what? Investors are like, whatever. And they just ripped this thing. It didn't even get back to its 200-day moving average, which if you pull up a 5-year, this thing hasn't been below it in a long time, right? Look at that. I mean, that's insane. That's a bubble, obviously. Now, at some point, it's going to burst. And I have a little bit of a bearish options trade here. I want to define my risk. It'd be crazy, in my opinion, to kind of short a stock like this. All you have to do is look at that chart. I think we're going to retest by the end of the year, guy. I don't think some of these stocks that have been like poster children for the bubble, the AI bubble, I just don't think they're going to close on their highs this year. I think they're going to close back towards levels that maybe make them interesting into the new year. But if you close at the all-time highs, if this stock is at 205 on January 1, I just don't think that's a great setup if you're bullish in the stock.
No, it's fair. And what you pointed out, and was worth pointing out again, the fact that 200-day moving average, it is a line in the sand going all the way back to the middle of 2023. So it stands to reason at some point that's going to be retested, and then you can set up a trade on the back of something like that. You could look to target 143 as an entry point, and then then maybe, as they say, reverse it and play for the upside again. But your point is well taken. He's telling a great story.
And by the way, you can see from this chart, Palantir has been around for many years, over a decade. And now it's all of a sudden like, oh, well, people are the most bullish they've ever been, literally at all-time record highs. Same thing with Bitcoin, same with MicroStrategy and many of these other companies. And this is a huge risk. But there's a lot of other opportunities. We talked recently about the robotics and automation companies that are on the screen right here. Many of these are going to probably over the next 5 to 10 years do extremely well, and something that we are keeping a very close eye on in this channel. But when we're looking at the crypto markets, when we're looking at the bull bear, conversation, listen, you can still be bullish and bet against the market. And you can still be bearish and bet for the market. But you have to make those decisions in your own portfolio. I think I've laid out my thesis very clearly over the last 6 or so months on where we are in the cycle. That has not changed. I haven't seen any data or any analysis that could change this viewpoint just yet. Now, am I open to changing my thesis? Of course, because that's how a good investor works, right? They look at new info and say, okay, you know what? Maybe it's time to get bullish. But we have not hit the capitulation phase in the market just yet. People think that we have, but we haven't. Because when people get super bullish, 2 days after we do see a massive drawdown in the cycle, and every little pump, they're like, you see, we're back in a bull market. We're starting the bull market again. And it's like, we haven't even formed a bottom of the market yet, right? And a bottom forms over the course of weeks or months. These are the signals that we haven't hit capitulation. So again, this is my macro analysis for the end of the year. We may do another kind of macro analysis, without delaying these videos. If you guys want to see more up-to-date videos on where we are in the cycle, where I am with my thesis, let me know down below in the comments of this video. Remember, I'm not telling you what to do in your portfolio. I'm just sharing my opinions and analysis on the market and what I think is going on. And this is no indication of what I'm doing in my portfolio, because we don't even talk about what my positions in my portfolio are anymore on the channel for many different reasons. But the most important reason is because it doesn't matter what I'm doing in my portfolio. It matters what you're doing in your portfolio and whether you're making money or not. Because the whole point of this game is to actually make money in the markets. And there's a lot of people who continue to lose money in the markets and not change their thesis, and they think that's winning. See you guys in the next video. Invest responsibly. Thanks for watching.